I'm John Howard, and today I've got a short video here on basically centi-millionaires. So, global centi-millionaires, people with families or people with $100 million or more, and how their portfolios are allocated. Specifically, how much of their portfolios are allocated towards real estate investing. This is actually from an article from CNBC, and it's also highlighting, the article from CNBC as well as, different people that have family offices that manage the money for these centimillionaires. Okay, the world's wealthiest individuals, those with a net worth of $100 million or more, have a unique approach to investing that sets them apart from the average investor. According to a recent article from CNBC, these ultra high net worth individuals are focusing heavily on real estate investments. The uber wealthy live a life apart, and their investing strategies also look vastly different from the modern average investor's portfolio. Globally, there are 28,420 centimillionaires in the world, obviously, or individuals with a total net worth of $100 million or more, and they're concentrated in New York City, the San Francisco Bay Area, Los Angeles, London, and Beijing, according to data from a site called Rise, WRISE. This elite demographic is selective when it comes to investments. And again, this is according to someone named Salvatore Buscemi, CEO of Dandrew Partners. He says they don't invest in get rich quick things. Oh, surprise, surprise. And they don't do a high concentration of publicly traded equities. They don't even invest in crypto, believe it or not, says Buscemi. Instead, they seek to preserve their legacy and wealth by investing in very strong, stable pieces of real estate, particularly Class A properties built within the last 15 years. Real estate investments typically represent 27% of these individual portfolios, according to Michael Sonnenfeld. This is now a new person. Michael Sonnenfeld is the founder and chairman of Tiger 21. Just so you know, Tiger 21 is like a networking group in order to get in there, you have to have a net worth. In my last research, I did research, before doing this video. The minimum, according to very light research, is 20 million. You have to have a net worth of 20 million. Will they let somebody in with less than 20 million? Maybe, I don't know. Maybe there's probably quite a few people in there that got in when the minimum was lower. But Tiger 21, I've heard of it for a long time. It's kind of a network of ultra high net worth entrepreneurs and investors. So why are the wealthiest individuals investing in real estate? Well, there's several reasons. If you've seen any of my content, whether it's kind of posts or videos, you've heard it before, but it's basically stability. Real estate provides a stable long-term investment that can weather economic fluctuations. Cash flow. Rental properties generate consistent cash flow through rental income, providing a reliable source of passive income. Appreciation, of course, whether that's natural or forced appreciation. Two different subjects. Forced appreciation has been in another video, but that's more like, the investor adds square footage or, makes improvements on the property, does solar to reduce expenses or converts a garage, something like that, right? Appreciation over time. Real estate tends to appreciate in value. Basically the U.S. national average from 1967 until now is 4.24%. And this allows investors to build wealth through equity growth, right? Diversification, and also, of course, amortization. So paying those loans down combined with appreciation, yields more equity, right? Diversification, real estate investments can help diversify portfolio, reducing overall risk. While the ultra wealthy may have the means to purchase entire properties outright, average investors let's say, mirror these ultra high net worth moves and invest in real estate through various platforms and investment vehicles. To give you an example, so again, the spirit of this is also to kind of show you that like an average investor can like literally invest only a couple $100, in other ways to kind of get, exposure to real estate investments. Number one is pretty common. You probably could have guessed it. It's called REITs. REITs is an acronym that stands for Real Estate Investment Trusts. REITs are perhaps the most popular option for average investors to gain exposure to real estate. Companies like Realty Income Corp, they have the New York Stock Exchange sticker of O. They invest in diverse portfolios of commercial properties with strong credit tenants. Realty Income also pays a monthly dividend to its investors. It currently pays out 26 cents per share, which is a monthly annual. They pay the dividend out monthly, and it's an annual yield of 5.8%, which is not too bad actually. I think even Chevron for a while I had one of the highest dividends I ever saw, which was like 5-something%. So that's a pretty high annual dividend, you know, compared to the average, right? Number two is a platform called Arrived. This platform is backed by Jeff Bezos, and it allows investors to buy shares of single-family home rentals and vacation rentals with a minimum investment of only $100. Arrived handles all the management responsibilities while investors receive monthly distributions from rental income and potential price appreciation. Thank you, Jeff Bezos. Number three is Citi Fund. So Citi Fund is a group that offers investors the opportunity to capture a piece of the $32.6 trillion home equity market with a minimum investment of $500. Through home equity investment agreements, investors can gain exposure to the real estate market without the need to purchase an entire property. Citi Fund yield has a target yield of 8% with a guaranteed floor of 7%. That's a very strong guaranteed yield. I mean, I don't really know many guaranteed floors other than insurance products, right? Actually, one of my jobs out of college, my first job out of college was Merrill Lynch, but after Merrill Lynch, I did investment banking. After investment banking, I moved to Los Angeles and I worked for Sun America for 3 years, actually a little more than 3 years. And we sold annuities, variable annuities. And we had something called the Income Protector, which sold out like crazy very quickly. But insurance did bring it back. They had to discontinue it because they got concerned about it because it sold out so quickly, and they were worried about it. But even back then, this is 20 plus years ago, they didn't have a guaranteed floor of 7%. So guaranteed floor of 7% is very high. Nowadays, there's also IULs, which is like basically life insurance, index universal life, where you have guaranteed floors as well. But 7% is a very strong floor. So by investing in real estate with smaller amounts of capital through platforms like this, the average investor can follow in the footsteps of the world's wealthiest individuals and potentially benefit from stability, cash flow, appreciation, and diversification that real estate investments offer. As always, it's essential to conduct thorough research and consult with a financial advisor before making any investment decisions to ensure that they align with your personal financial goals and risk tolerance. So there you go, everybody. That is a quick video and some content on centi-millionaires and how these $100 million families invest their money. And I think that there is other content I did where it was an article from Yahoo where it was like people with $1 million or more had a concentration of about 53%, and they had X percent, like 20% in commercial real estate, and then like 30% in residential real estate, right? So that's pretty interesting. But still, to be a centi-millionaire, 27% focus on real estate investing. That's the highest part of their pie. That's pretty compelling. So I wanted to certainly share it with you. I have been talking, focusing on real estate content because I'm a real estate investor. I actually launched and maintained and grown, 4 different businesses up to 7 figures plus per year. And even during that time, I, owned and or operated about 5 different Airbnbs over time. So, I mean, the beautiful thing about that is now I've got about a $3 million rental portfolio, and it earns on average, anywhere from, let's say, $15,000 to even up to $40,000 a month sometimes. And it's certainly, benefited me in a lot of ways as I've gone through some ups and downs in business. And it's a very viable path for anybody to, build a real estate rental, empire, right? Or just at least a portfolio. So I talk about how to, achieve consistent and frequent 4 and 5 figure deposits and a $1 million or more net worth through short and medium term rentals, because that's kind of been my sweet spot, short and medium term furnished rentals. I've also done long term rentals, of course. You also see me saying, turn a tax liability into a scalable investment. If you're interested in real estate investing, what you'll do is you'll see there's some links in the description area. You can go on there. I've got something called the SMTR, which stands for short medium term rentals launch kit. Super, very, very basic launch kit. You'll see that you can go ahead and go to that. I also have an email address if you want to contact me. And I also do very, very basic email coaching. Like if you're somebody, or even if you know somebody, right, that wants to get into real estate investing, or even short medium term rentals, and you want to kind of speak with or consult with somebody that maybe is a little bit further ahead of you, you can go ahead and do that and contact me. So, other things you can do if you like this video, you can go ahead and consider giving the video a like. Talk about right now, I'm doing quite a bit of content on real estate investing. I also do content on investing, and going to be doing some content on credit at some point soon as well. You can consider subscribing to the channel if you like this information. Again, I mean, I think the reality is that short and medium term rentals, maybe not medium term rentals, but premium short term rentals are producing on average to really the most cutting edge hosts about 20% cash on cash return, which is pretty strong. I don't really know many real estate investments that are producing that level of cash on cash return. So if you like this content, you can consider subscribing to the channel and giving the video a like. Okay, thank you very much. And yeah, if you have any questions as well, you can put them in the comments area. All right, take care.